Donald Trump has been making yet more headlines over the last month. He announced that the US would be pulling out of the Iran nuclear deal. He cancelled a much-anticipated meeting with the North Korean leader Kim Jong-un. And just last week, he imposed tariffs with immediate effect on steel and aluminium imports from Canada, Mexico, and the EU. However, unlike a couple of months ago when fears over a trade war resulted in a big drop in markets, there's been very little market reaction to these latest tariffs. In fact, the S&P 500 index ended the week last week with a gain of about 0.5%. There's been even more turmoil on the high street, and Marks & Spencer has become the latest big name to announce store closures, with about 100 stores expected to be closed by 2022. In contrast, the online supermarket, Ocado, has just enjoyed a 40% surge in its share price and an elevation to the FTSE 100 index after striking a deal with Kroger, a big retailer in the US. May was a good month for most developed markets, including the UK, which gained another 2.8%. The US also performed well, with the S&P 500 index climbing 2.4%. However, Europe didn't have quite a good month, as the Euro Stoxx 50 index fell 2.1%. It was also a disappointing month for the pound, which lost just over 3% against the dollar. With markets recovering, implied volatility has been quite low lately in the options market. So we've taken the opportunity to strengthen our protection in the multi-asset funds by replacing some of our direct market exposure with relatively cheap call options. This means that we continue to get plenty of upside should markets continue to do well, but at the same time it reduces our losses in the event of a downturn.